Hello everybody. This is a short video to look at how to determine high probability trades. And what I'm going to cover is I'm going to use Apple, the current price of Apple. I'm going to track it over a few days while I make this video. I'm going to start here with a view of what it looks like today, what the various flavors of the different time frames look like in terms of support resistance, the neo constructs that are out there, and then I'll add to it each day until we see the trade either come true or not, depending on what we see here on this first slide. So let me get started. How do you even do this? You look for existing zones supplied by the TA Today charts to begin with, but I'm going to back up, and instead of doing that, I'm going to take a different charting system. I put it on 3 months, and I'm looking at Apple, and I'm going to look at the constructs that I can see without the TA Today support and resistance zones to begin with. And so what do I see on this chart to begin with? The very first thing I notice is I've got a huge volume, wide price spread bar, and that bar, because it was a gap down, really looks like that in terms of the price spread. So you've got a wide price spread, high volume bar. Now, anytime you get one of those, the first thing you should realize is that the probability is reasonably high that for some period of time it's going to trade within that range. What we already saw on Friday was a break below that range, and so that becomes a rather significant event and something worth examining in the next few days. And so if I were looking at Apple and wanting to go long, this would be a tough spot to go long, because if I want to consider the probability of this trade working, the probabilities are not that great from a long perspective, just looking at that piece of information. So the piece of information is that, hey, I've got a wide price spread bar, measures from here to here. Usually we know it trades within that for a period of time. Well, a period of time is longer than a few bars, and we're already starting to break below it. What else do we see that might make this break lower as it has? And that is that you have another high volume, wide price spread bar that has a low down here. And if this stays outside of this for a couple of bars, more than likely it's going to seek the bottom of that bar. We know that just from our historical information. Okay, now having known that, let's pull it back. And again, I'm using all this without any kind of support and resistance zones on the chart. Pull it back and look for other significant bars. There's one here, and if I've got it on a weekly now, and this significant bar has a high volume spike, and the bar itself is, the top of the bar is right here. Now that's significant in that that was the low of that bar we just saw on the daily chart, and it did not have a lot of volume comparatively to that price point. So on this time frame, on a weekly time frame in Apple, if you can start thinking about the potential scenarios. If this comes down, test this area again. Probabilities are still fairly high because this was the breakout here over this swing point high. Probabilities are fairly high that a test that cannot break this down is going to hold again. It's still about 60-62%. So that's another probability we know, and we know that on the weekly time frame. So when we look at all of that on an intermediate term time frame, this still may be a good trade. So it's not a good trade on the daily time frame, but it is potentially a good trade on the weekly. And that trade would be some sort of a trade down into this little zone that holds, right? Gets underneath this price, and on a weekly basis gets back above it. That would be the trade scenario. So let's pull over the TA Today charts and see how it stacks up there with all of the markings that you're provided with that you can look at. And what should you be looking at? Well, again, you want to look at the existing zones supplied by these charts. What are the existing zones? We have resistance now here because we broke under it, and we have support in this area, and note that is this low. If we pull over that intermediate term time frame, right, and we look at it, that intermediate term time frame again is actually going to show us that zone that we just looked at Well, that happens to be the retest regenerate zone. And it's showing us in that area that this is probably a pretty good area to expect support to come in. So just as we saw without the benefit of these charts, by just looking at significant price points, looking at the charts give you those probabilities, not so much probabilities, but they use those to direct you into your support and your resistance. So given the way this thing is stacked up, this looks like a decent area for one potentially to take a chance, and that chance would be a retest regen. The bottom of this is 116.62. If it gets underneath that, the probabilities increase rather significantly that it's going to seek the bottom of the big bar. And so the risk is back to here, which actually would be an even better entry point potentially. Now, on the weekly time frame, if we consider a few other facts, on the weekly time frame, we actually, if we consider trend, we have on this time frame a bearish trend now. So that's a negative. In other words, we've gone sideways long enough to where the trend on this smallest drop, if you will, has turned it to bearish. And if we go back to that daily chart, I'm quite sure that daily chart will show us bearish too. That's interesting because the daily chart hasn't been able to print a swing point low on that run up. So you don't have a swing point low to break here until you get down to here. So you've broken on the weekly, but you haven't on the daily, and that wouldn't break until you break here. So you really don't have breaks on multiple time frames, which is kind of a positive actually. So you had a big run up, spike down, and now you're coming down to test that swing point low. Going back to the what do we look for? We look for any overlap between the multiple time frames. So if I bring this up and I look for overlap, I've got a price point to about 119.22. If I go back to my weekly in terms of the support zones, weekly here 122, and let me find the weekly. Here we go. 122 is going to be here, and then actually 119.22, and then we've got this top at 119.75. So you've actually got overlap between the two zones on the two charts. So that's a positive as well. You want to consider the trend we just did. Now you search for any bars of significance across those multiple time frames, and the way we started, that's exactly what we were doing. We were looking at this bar, we were looking at this bar on the way down, so forth, right? Then we want to consider any Neo-TA type risk-reward situations, and in a way we've already done that as well because we talked about this being an anchored, a retest regen zone. It's been tested one time, right? High probability gets bought the first time, and it did. Now the probabilities are lower, 62% or so. So as it comes back, that's one situation. What's the other situation? Well, if we were to actually break higher, you do have multiple swing point highs up here that could give you a big boost on the way up. At this point, you've broken these two swing points, but you did it on separate events, so it kind of dissipates or makes it less important, shall I say. So that's not a bad thing. And is there anything else here? Well, not really. We have the potential for maybe an ABCD down, but it's almost zero. I mean, it doesn't point to anything. So in other words, if I look for any kind of projections, we have this particular projection, but it came all the way back above it, right? So the projection is about the same. That doesn't do anything. The only other kind of projections we use are ranges, and we know we have a range here. So that projection of that range could take us down into this, which actually brings us into this low. So we know that if the range does push lower, then we're going to get the push probably down to fulfill the range. Now, knowing that, everything we've talked about, what does that do? That tells us that this area is critical. If you lose this area, coming down to this one, into this low, and maybe even the lowest part of the range, becomes much more probable. So if you're going to take a long position at this higher level up here in this little zone here, if you're going to take that position, you definitely want to have your stops right up underneath it. So that's something that we're being able to see here. That would tell us we're wrong and that we're going to have to suffer a drawdown if we stick around. How much is the drawdown? It's about 10 bucks. It's about 9%. Definitely not something you want to suffer through unless you like the pain, I guess. So given all of that, right, we've assessed the area that we were looking at, and if price breaks lower, would it likely mean a long position would have a higher probability of failing to be correct? In this case, yes, it would, and that price point is this 119.22 area. So in other words, if we get underneath, say, 116.62 on the intermediate term time frame, we're probably going to carry down to the 110 area, 109 area. So we're going to suffer $7 more loss, which is roughly 7% more. So we know that as kind of a risk situation. We're not considering the short situation, but it would be the same. Now that we have those price points, we take 25% of the ATR that's found over on the trading cube. So let's pull that up. If we come over here to the trading cube, scroll down, and put Apple into it, then we can look down and see what is the ATR on the time frame we're interested in, which in this case is the intermediate term time frame. So if we scroll all the way down here, we can see it's 479. If we take 25% of that, that's about $1.20 or so. So $1.20 is the buffer zone that you need to give this on the way down. So $1.20 underneath this low would give you about 115.25 or so. So about 115 you'd have to stop out of it. So now that you know where your stop goes, and that stop that we just assessed is 115, we know the risk is back to here, is about $5 under that, so we're going to suffer 5% more drop, or roughly 5%. What's our reward if we happen to buy it towards the end of this price zone? Say we buy it like at 117. Let's just take that number. So if we buy it at 117, we're risking back to 109, and well, actually we're not risking back to 109, we're risking back to about 115.25, so we're risking $1.75. What's our reward? Well, if we're right, the reward should be at least a retest regen. So in other words, we should see a retest regen off this swing point low that was broken. And if that regen happens within 6 bars, which it likely would in this case, then it can travel back to the top of that bar. So we know it can get back to the top. That's about 125. Actually, it's about 129, I think. Let's see what the number is. 129. So that potentially on this time frame is the reward. So you can see the risk reward works. Then the question is, what's the probability? Probability is about 62%. So I could make a case that Apple would make sense on a retest regen that gets under this low and closes back over it. Now, I would probably want to actually just see whether it gets under it and back over it and reduce my potential profits. In other words, that price point's 119.22. Let's say it gets under this week, closes at 119.52 at the end of the week. I should buy it at the end of the week, 119.52, and look for it to trade back to about 129, potentially. Worst case, it trades back to about 121, 122. So we'd still make some money, and that would be a decent trade. Risk is back to that one, I think it was what the number was 115 and a quarter. So that's the scenario, right? It's about a 1-to-1 on worst case. It's about 3-to-1 on the best case, and the probability is about 62%. Now, I'm not saying this is the best case out there. There's probably, or I know there's higher probability trades than this one. We're just using the knowledge that we have to make an assessment for where we would be wrong, where we'd be right. And so if you're using this for like an options trade, you know, you would be trying to buy into this range. After you saw a successful retest or what looked to be, you try to buy it and then put your stops up underneath it. That gives you the highest reward, the least risk, and if it's a high probability case, right, a very high probability that you're going to actually make money or not. Now, you could talk about other cases. In other words, we could talk about just waiting to see if it came back to here, in which case it would be testing this bar, and your probabilities would actually go up if that were the case. But then, you know, that's farther down the road, and one would have to assess that when it's time. You would also know at that time that you've got a different case too, and that is that the longer term trend, that has been in effect, even though we're bearish here, you definitely would be sideways at best, right, when you get underneath here. In other words, all you could expect would be a bounce trade back up, but it would probably be a pretty decent bounce if it took place. Okay, well, what we're going to do is we're going to stop it here, we're going to save this, and then we're going to come back in a couple days and look at what's transpired and continue the video. We've outlined the trade, and just to put those numbers on the board here, and so here are those parameters, right? The probability of the hold on the bullish retest regen, the entry, if you get these conditions, the stop would be here, right? Your target, which we didn't put in here, but we can put in right quick, and that would be about 129, the 121, 122 worst case. It's not the best trade, but these are the parameters, and now we can watch this thing play out and see how it looks. All right? We'll pick it back up from here next time. Okay, we're going to continue with this this particular setup and trade explanation on Apple. This is part 2. It's 2 days later. Apple has finally began, not finally, but 2 days later it's totally broken down. So if we look at the chart here, when we were looking at it on the first part of this chart, it was on this bar. Well, you get this bar that breaks, right? And then underneath that, you get the extension down, volume expands, right? So now you have a break at this level, and now you've got, and that was a suspect break, and now you're up underneath it, right? That's this arrow here. Now you're up underneath it, and volume's expanding. This could be some sort of a washout move, but it may not be, because if we look at it on the weekly here, on the weekly time frame, right, it's coming into this big bar. That's the volume bar. That bar has about 460 million on it. You're already down 2 days now with 200 million almost. So this is probably going to do as much volume as that one. And the fact that it's coming down like it is, you may get some sort of a washout move and an attack of this low at this point. And if so, volume's going to be up here. This volume up here is going to be somewhere in the same area or a little bit higher. You're going to wash out, and then you get your bounce. And that was the other scenario that we were talking about that was possible in that last video, and that this might be the better buy, if it doesn't set up here properly. So if you remember the parameters that we talked about the last time we talked, it had a 62% probability of holding this bullish retest regen zone. Now note, this isn't over yet. I mean, this is still the weekly time frame. So by the end of the week here, this still could be in this or up here or somewhere else. So it hasn't broken yet. It hasn't failed to retest and regen higher yet, because the week's not over. That's the weekly time frame, and so you have to realize it's the deal's not over yet. That whole entry area would have been around this area if a test of this 119.22 low holds. Well, that didn't happen, so that's out the window. Right, that part of it. So now you kind of have to tweak your parameters based on what happens from here, with respect to this particular point in trade. The stop would have been there. That would have got washed out today if it happened, because it got down to 113 something, and the target would have been back up here. So now, so that's kind of out the window. That's not going to happen. So what could happen now, and there's still the potential for a good trade, and that good trade would be that, today is Tuesday. The good trade would be that this thing comes straight on down, test into this area, and then starts to bounce and gets up here and holds the retest regen area. Now that's a lot to ask of it, right? You got to get down here, right? More than likely get down that far, or get down into this zone now. Set up a buy. You've had a straight down move, which means it's fairly stretched at this point. And if it's stretched at this point, you're probably going to get a good bounce out of it. Where's that bounce? Well, the bounce would take you back up into a test of these lows here, right? That would be the target on the way back up. And then, of course, this high volume high. So if you think about it from that perspective, and you start thinking about the price points, you got about 120 on this price point, and the low is about 109. So if you're able to pick it up around 109, right, you could have a trade. But now you're starting to talk about something that's a little bit, different than what we started out with. even though you could probably get a good bounce trade out of this, now you start asking yourself, okay, what's the probabilities? Well, the probabilities are starting to go against you now, because if this retest regen fails, the most you can hope for is a bounce. And so, at this point, you're starting to think, well, maybe the trade doesn't make sense. And so you didn't get the setup you wanted, you didn't get the parameters that you wanted, right? These parameters that we discussed, it didn't lay out that way. And so now we're down here and we have to look at it from a different perspective. So at this point, you just basically put it on hold. It didn't work out. And you move on to another trade that you were looking at because that trade didn't set up. Matter of fact, a lot of these trades that one looks at, they simply don't set up. And in this case, this one didn't set up the way we wanted it. So, as I said, there may be a trade down here on a bounce trade. If it comes down and then bounces off of that area, you could get a $10 move to the upside and only risk a couple bucks. Probabilities are not going to be as high, so it's a higher risk trade. But it is Apple, so it's not like there's no value here. So anyway, that's the setup. That setup didn't take place, so you move on. And I'll do another video like this at some point, and we'll look at another one along the same lines. Okay. Hopefully that was useful, and we'll pick it up here with another stock at some point. Thanks.